if you want to go ahead and share your screen, Dom, we could take a look at what's on your radar.
Or even his camera if you want. So I have an
You want to share your camera, or
you want to see me face to face, dude? Let me put my screen up for now. Hold on, just 2 seconds. So, I mean, I tell you what I thought.
I'm here.
Yeah, I tell you what I thought was.
It's only 5:30 here.
It's only 5:30.
Yeah, I didn't go to the beauty shop. I haven't been to the beauty shop yet, man.
It's been an interesting conversation. I just wanted to just pull out a couple of points in terms of the CPI. The divergences across the market are just insane, right? I mean, I've never seen anything like this in my career. Particularly trading the equity markets, the value growth, the growth value, everything.
Yeah, the rotation, you mean?
The rotation is, and it's almost like instant rotation. Extreme rotation, and you can see it, like even just drilling down to like 5-minute charts. I mean, yesterday the NQ came off slightly, Dow was up 150 points. It's instant, and it's just, I always when I see things like this and the overall kind of divergences in the market, I just think this is a topping process. And I was saying to my guys on the channel yesterday, like when you get, I call it kind of the 3-day rule. Day one, market comes down. So, you had ES come down from like 350 to 304. Second day, and then bought instantly all the way back up. Second day, come in, did exactly the same. Went down to 320, 50 back fib, instantly back up for the minutes. And then the third day, it just, it will come in and it just won't, it won't bounce. It will just go down and down and down. And that's what it's doing today. And it's just, in terms of the FOMC minutes, if the market cannot understand what's going on at the moment, then we've got a severe problem. I mean, it's massively communicated in not only in the minutes, but also in the speeches and everything from Powell and the rest of the gang, that, essentially they really don't want to taper, and they will taper as, whenever they want to, and they will want higher inflation first, and that needs to be persistent, and so forth and so forth. And at the same time, they're talking about transitory inflation rather than persistent inflation. And the market, in terms of liquidity and in terms of interest rates, has never had it so good. So I do find today rather strange. I don't, the narrative that the FOMC is somewhat of a surprise shouldn't be, because they seem to explain at every single meeting what they want to do and where they want to go. I find the divergences between the bond market and a kind of reality in terms of inflation insane. I really don't understand what bonds are doing at the moment. I mean, they seem to be completely negating any form of growth, with yields going lower, prices going higher. That's very strange, particularly when you're looking at inflation. So, they're just, the market seems to be pricing in the fact that this will be transitory and inflation will go back below 2%. Why you're buying a bond at 120 when you've got 4% inflation is just bizarre.
Okay, so here I am, Dom. I have 50K. How do I deploy it?
How do you deploy it? Buy puts, I think. That's the only. I mean, it's just very difficult. I mean, do you want to buy an equity market that's gone 100% up in a year, when no one's been working?
No, I want to short it.
Yeah, absolutely. But trying to short this market is just incredibly difficult. Right?
I know. I've done it. I've been stopped out at 100 million times. Sometimes they work, and you never know if it's going to be the top or a top.
Yeah. I mean, if you're a swing short, it's the most frustrating game at the moment, right?
Anthony's saying put the 50K back in my pocket. So cash is a position too. So maybe what we have to do here, what happens here is you're talking about the rotation from one sector to another sector, because people are afraid to be out of the market, out of stocks. Maybe they could find a better performing group. The bottom probably comes when they stop rotating and they go to cash, which is a position too.
Yeah.
on a capitulation move.
Yeah,
So,
exactly. And for me, rotation is always a sign of the highs. Right? Anyone who really talks about rotation at highs, you know. And
yeah.
I think you mentioned about the Russell. You know,
Yeah.
it's been
You know, I
extremely choppy over the last sort of
well,
like
I mean,
6,
look,
8
it
weeks.
hasn't made a new high.
No.
It hasn't made a new high since March 21st.
Yeah,
Okay.
exactly.
So, do
Yeah.
you have any fundamental reason why the Russell 2000 just stalled and moved sideways while the other
Yeah, I mean,
indices? Go
yeah.
ahead.
So you know, I look at a bigger time frame here, guys. Here's the Russell on a monthly, right? This goes back to 2008. Okay, you can see this channel, top line, bottom line here, right? And obviously we broke out of it in March. I mean, just look at that insane ramp, right? It's ridiculous. But the top line here, 2007.
This is
You know,
not the Russell.
it is
It's still the
Russell.
S&P.
Okay, apologies.
Maybe you have to do a new share
Yeah,
if
I
you're
didn't realize.
changing
Okay,
screens.
a new share. Yeah, I didn't
Yeah,
realize. No, I was
yeah.
trying to put it on the same screen, but okay, but
Well,
see now you're seeing the
there you
Russell.
go. Yeah, got it.
So you can see, you know, this is a monthly chart. 2007 highs.
Yeah.
Obviously, we know what happened in 2008. Okay, and you know, where did it max out? Right. I mean, that's you know, it's this 14-year trend line, right? And it just keeps bumping its head. Didn't get there. So I'm looking for the Russell to come in about 2050. That also there's a fib I think about 2064, be the 23.6. Yeah, 256, and potentially down to sort of like the 1700 mark.
That's what I'm looking for.
Yeah. Now, Christ knows when it's going to get there. Obviously, this is on a monthly.
30%, right?
Yeah, exactly. And it's, I mean, we all know it's due a pullback, guys. I mean, we've all been saying
But
it
why?
each week.
Why have you know, we're talking about economic growth that's going to be fantastic here in the US. These are domestic issues mainly. So they don't benefit from a weaker dollar like the multinationals do. Why has the Russell been stalling the way it has?
Because I think it's up against that trend line. I don't know
Okay,
why.
maybe I'm looking
You know,
for a fundamental reason. I know
there is,
all the technicals.
yeah, but I don't
I,
think this. I don't think you can apply fundamentals in this day and age. I mean, what are fundamentals? You know, I mean, Apple's just gone up sort of like 20% in the last 6 weeks. I mean, it's a $2 trillion market. I mean, you know, it. It's just cash. There's $120 billion going into the markets at the moment, right? You've got the banks doing reverse repos. They're giving $1 trillion back to the F.A.C.E tonight, and you know, you can look. Here's the Russell. I mean, that's just insane. Look at it. I mean, if you were short all these tops, it comes down, it comes back to bite you. It comes down, but comes back to bite you. And I always say, I mean, I said to my guys and to my followers, I just said, guys, you know, there will be a lot of money to be made on shorting the Russell, but no one will make any because you'll be stopped out every single time, right? And you know, it's
you could have just had your stop over the March high, never took it out.
well, true, yeah. But if you did it sensibly and went back to break even, you know, it will just come back and bite you, right? So,
well, if you don't teach
agree.
your students to take partial profits when they have 30, 40 handles in the Russell, yeah, they'd be break even. But I mean,
no, I mean, we do. But what I'm saying is, you're looking for the big one, like you just said earlier, right at the beginning. You know, is it this time? Is it this time? Is it this time? You know, this move here.
You know what time it is?
Yeah.
Well, you know when it happens? When you give up on it.
Yeah, absolutely.
After you're grinded out, Mr. Market will grind you to exhaustion so that you know why? Because I've been exhausted many times through this. And especially if you're taking losses attempting it, the minute you turn your head, Mr. Market will go without you.
Yeah, absolutely. And I think that's why I think, you know, I can't remember who suggested that, you know, July, August, we're going to see some sort of sell-off. I mean, that's been the pattern for the last kind of 3 years. I think, you know, we're just due a correction. I mean, there's no more stimulus at the moment. You know, good news is still good news, and bad news is still good news. And that will slightly change. I don't. There's some fundamental things in the market that just seem to be very, very strange. Mainly, why are rates going up? why are rates going down, price bond yields going up? I don't understand that, because they're either telling us something that doesn't reflect in the outside world, i.e., growth going to stall and so on and so on and so on, right? So that's very strange. And I would go back just to guys and talking about inflation. I call the CPI the Consumer Propaganda Index, right? The reason they changed all the indexes was because inflation was too high, right? And interest rates were at 5%. And what they decided to do is completely change all the indexes, started in the UK, in the States, and so forth, right? To remove inflation, right? That was the whole point. They wanted to remove inflation so they could bring down interest rates. And they wanted to bring down interest rates because they knew they were borrowing and borrowing and borrowing and borrowing at a government level. So the irony now is they're trying to increase inflation. But obviously, once the genie's out of the bottle, you just don't know how long it's going to, how far it's going to go. But yeah, it is a propaganda index. It's just laughable in terms of what they put in there, what they don't put in there. And we all know, if you go to the shops, if you look at house prices, if you look at, gas or petrol or anything like that, prices are going up, right? And they're way above 5-6% in the UK. House prices, like 10%, 20% year on year in the States. So it's a farce, right? And it's just a manipulated number to essentially control interest rates, right? And that's how they've essentially nationalized the market. Right? They've just nationalized it, and as some of the guys were saying earlier, right? It's so important now that markets essentially continue to go up. But
okay, currencies are a little more difficult to manipulate. You have a view on the dollar? Is this bounce in the dollar just a bear market rally in your view, or is something else starting?
Again, I think if you remember, I smashed the dollar last time I came on. I said, right, this is where it's going to go, and then it's going to come off, and it was absolutely perfect. I think on the dollar, as I said last time, again, this is a monthly. I look at the higher time frames. You've got this channel that broke out. You've got the highs in sort of like 2001, subsequent kind of lows here at 2011. And if you see, we've got this triangle, and on the fibs here, we've got this 93 level, which is a 38, and then 50 back at kind of that's
96.
100. Yeah, exactly. And so for me, I'm staying well away from the dollar. It's just, I'm long above the trend line from the highs.
Where's that come in?
That comes in about 97. Okay.
And
short below the trend lines from the recent lows, which is about 90. All else is just chop, and I just think I think it's very difficult to trade with every central bank trying to kind of manipulate their currencies, and then the interest rate play and so forth, and then the stimulus play as well, particularly on dollar. I just look at the big picture and stay out of the day trading, because I just think the only interesting thing is it's obviously below the trend line from its low, right? And that currently comes in about 94.50. But it's I mean, stick a finger in the air, you could have gone long or short at like 92, and you would have been offside, but you wouldn't have lost money if you just kept the thing, right? So I think people are thinking below 89s and it goes, but the dollar with always being a safe haven, it's a hard one to call, right? I think
isn't this like an Elliott pattern where it's flat and a double bottom? So there are some pretty dollar bulls that have been looking for, sharply higher. How about the recent sell-off we've had in WTI after a monster bull run, and your view on metals, PMs?
Yeah, so again, we're at the situation, I think, where I don't particularly trade gold. I sometimes I look for for swings, and the reason I do that is because, again, I think it's a very manipulated market from the banks, and so I look for essentially value when it went down to 1750. I don't see it going to 2000. I think it's a controlled market, very hard to trade, so I stay out of it. I think the same's happening to crude now. It's become a political toy. Can we use crude to create inflation? It can't go too high because there's too much inflation, and so on and so on. So I think, and again, you know, there was just 2 days ago, there was a fire in Dubai, that the price went up, and then there wasn't an agreement, the price came down, and so forth. So you just got to look at the technicals, play the technicals. I think it will probably stay between sort of like $64 and $80, and and doing a lot of chopping around there. And I think gold will probably stay between 1750 and 1850. I don't see. I mean, people have been talking about the reflation trade, particularly on gold, for a long time. It went up to 2000. It came straight back down. It's hung around, and I think people have kind of decided that almost cryptos are kind of where you should be rather than gold, because there's a potential higher return in it. And I think gold, like I say, is somewhat manipulated. So personally, I just look for some value swing trades, small notional, and trade, sort of like
with all due respect, Dom, I've been talking to you for about, I don't know, 15, 20 minutes. Are you strongly neutral the whole board?
No, I am waiting for a correction in equities. Okay, I think. Can you see my S&P chart here?
Yes, got it.
Yeah. So on the daily, we just broke through this 326 area, so 318 to 316. I'm just looking at the, we were talking about Sal rallies mode.
You want to buy a hard break in equities.
I know.
What level?
So the hard break is 275. So
275?
Yeah, 275 is the.
What do you mean? You mean 42.75?
Yeah.
Okay, that, you just said, yeah, I need the whole handle. 42.75.
Or 42.75. If we consistently trade under that, then we'll be selling rallies. And I think we'll be looking to sort of like under 4,000 in the next move by September. That's what I'm looking for. Could it go higher? Yeah, the chart suggests you can go to 4,400, a little bit plus, and above that there's like a 4,700. But I think it's.
I like your monthly target.
Yeah. Well, on the monthly, we can, come down to, 3,800, and then again that would be a fib move. It's very hard to have any conviction on the sell side because look at that monthly chart. I mean, look at the wedge. We are, this trend line here goes, back to 2002, and we just smashed it. And when we broke out of that 3,740 area, it just 5 months of just ride, and really to be truly kind of looking to sell rallies, you want to be under the 5 SMA on the monthly, right? As a minimum, and that comes in at kind of 4,145, 4,150. So you can't have any conviction in shorts, where okay, look, it's come up, we'll sell it, thank you very much. It comes up, we'll sell it, thank you very much. You can't have that conviction until some of the big levels are just taken out. And what's been happening is we get near or nearabouts. I mean, we just didn't quite touch the trend line here on the wedge. You see, this was.
So how about back inside the wedge, and you have your wedge anchored at about 2,500, and wedges are known to retrace 100% of the move.
Yeah.
Did you know that?
Well, I did. They can. I mean, it's very rare. On a monthly
not that
chart.
rare. Not that rare for wedges. Maybe in the S&Ps.
Yeah.
But the formation itself, I could show you multiple examples of wedges rising and falling.
Yeah.
That wherever you have the wedge line anchored for the full formation, I've seen 100% retracements of it.
And what time frames?
Well, it depends on all time frames.
Yeah, I mean,
a chart is a chart. Yeah. It could be a 15-minute, it could be a monthly. The formation is the same. And most people think that you're going to get a fib retracement off a wedge, and I've seen 100% retracements. Just,
Yeah, I mean, yeah. I mean, I think something catastrophic. I mean, the trouble is, we're in a, the Fed's in a do or die situation here, right? The response from sort of like 1998 is drop rates. That was the LCTM, right? The Russians defaulted. LCTM screwed up the banking market. They dropped rates and started flooding liquidity. Same in 2008, and then it's been constant liquidity and dropping of rates. As soon as we had the taper tantrum 2014 and 2018, markets dived like 25% in 3 months. So they know, everyone knows that as soon as the word taper happens and we start reducing stuff, even though they're slightly talking about it, basically the market is just saying, you're not going to do it now, you're not going to do it now. It's a game of kind of chicken, it's a chicken and egg, right? Who's going to pull the lever first? And as soon as they do, markets are coming off. How far would they go? Anyone's guess. And if we are to see, a real true movement, particularly down to 2,500, I would expect essentially the pandemic to rear its head. Right? I just can't see a quick move down there. And even if we did have another pandemic or another kind of natural disaster, what's the default? Well, it's just flood the money with more flood the market with more money, right? So, you've got this since 2008, 2009. You've got this situation whereby if there's anything bad happens, something good comes out of it, which is, quote unquote liquidity. So the market's trained, to take the bad news as well. Actually, we're going to get some free money again. Let's go higher. So it's a difficult one to have. It's a difficult one.
Okay, so Dom, now would be a good time if you'd like to show your website and how people could follow you and be ready to pull the trigger when you come out of your neutral gear.
Yeah, well,
and start pulling the trigger, huh?
Yeah.
Well, I mean, I'm just feeding back to what I've heard. I've heard explanations about why a market may go up or down. But I really haven't heard any conviction about anything in your voice about any instrument at all.
No, I absolutely
agree. So you're
agree.
strongly neutral right now, the board.
I am, yeah. I'm
and
strongly,
that's okay.
Yeah.
That's okay.
The way we play it at the moment, is level to level, right? Do not look for the home runs. Level to level, and take the big trend lines. When they break, you go with them. Use them as resistance, support. The market's been very, as people know, it's been difficult to trade over the last sort of like 8-9 weeks since April. Strong upward bias. I love it when we get a smash down because we go in hard and it's great. So yeah, you can follow me on at Trade Inflection. My website is tradeinflection.com. One of the things I do want to mention is we do stop pick levels, and we've been doing it since January. It's free, and it's basically before the open. It gives you an entry, a target, and a stop, and we're up 63% in the last 6 months. Right? And I think it's 105 trades, 60 plus winners, 30 plus losers.
Mostly intraday and 3 days setup. So,
correct. Exactly,
okay.
Yeah.
I see that.
And that's that's kind of a new addition, and it's working really well. We're at 67% win ratio, which I think
that's Steve, a good hit rate.
Yeah, Steve Cohen said his best traders did over 65%, and we're looking at 67. So
okay,
very good and very conservative. We don't chase AMC and all that crap.
I mean, sometimes the right thing to do is nothing.
Yeah. Well, I think you've got to let the markets tell you, right? You've got to be in tune with the markets. And, like your last panelist was saying, it's difficult. A lot of things fundamentally are not working. And, sit on your hands, because when the right time will come, then, you have
ammo.
Then you can,
you have the ammo. Yeah,
absolutely.
All right, Dom. Well, thanks for your time today, buddy.
Yeah, lovely to speak to you, Dale.
Yeah, and I hope you don't mind. I wasn't trying to give you a hard time. I just, I'm trying to come up with some copy for your interview. You know what I mean?
Yeah, no, it's very rare that I sit on the fence, but at the moment, it's.
Ouch.
I am. My gut feeling is that we're going to see some liquidation break in equities over the next 3 to 6 weeks. Timing is really important. Timing is really important, and start small, build your position, and see how you go.
Okay. Well, listen, Don's a pro. I know for sure he's going to keep you out of trouble, especially if he stays neutral. but
Yeah.
I can I can tell he pulls the trigger. All right, well,
Oh, yeah.
you know. And really appreciate you being with us today, my trading warrior brother. We'll reschedule something.
Yeah.
We'll schedule another one for later in the fall, and
Yeah.
maybe you'll have some conviction, and maybe by the time you come here in the fall,
Yeah.
the S&P might be approaching my 3,000 target or so. So
Wait and
that's what
see.
I think we could have. You know, we peaked right around the beginning of summer. April was spring was a great spring. I'm looking for a rocky summer into the fall. So
I agree. It's seasonal. It's fine. Yeah, I just think 3,000 is a long way off.
and they want to engineer a sell-off to get the Republicans on board for fiscal stimulus. There's nothing like people's 401ks taking 20-30% hits to get people to call their
Yeah,
congressman,
and
Republican or Democrat, to go out and do something about it. Save my IRA.
but
Right?
Dale, here's the thing. Here's the thing. You talk about that, and you're absolutely right. Okay, it's a political, nationalized market. It comes
Yeah.
down. Save my IRA. But what happens then, right?
Yeah.
Instantaneously, the market will bid it up massively.
Yeah.
Because
Oh, yeah.
again, it's a Powell put, right? And
that's going to be a hell of a buy down there.
yeah,
'Cause
yeah. You got to, yeah, exactly. And the trouble is that at 4,000? Is it 3.7? Is it 3.5? Is it 3? Who knows, right? And
2,600.
all right,
No Sir Pinkert from
I'll
my
write it down.
intelligence gathering. All right, write it down, buddy.
All right,
And
good to speak
if
to
it doesn't happen, tear it up.
you. Yeah.
All right, so good good joking around with you and
Yeah.
looking at your charts. I like your clean look on your charts, Tom.
Yeah,
Thanks again.
Take care, my friend. Take care.
All right, everyone. My trading warrior brother Dom at tradeinflection.com is his website. Check him out. And I could tell he's a pro. And that's going to be a wrap, everyone. And we'll see you tomorrow for TGIF to wrap the week. And don't just count your coins and your barrels of oil and your pips and currencies, count your blessings. And we'll see everyone to wrap the week tomorrow. Adios.
Bye-bye, Dan. Bye-bye.
Thanks, Tom.